Hi, I'm Brian Dominguez, and what I contributed to my team is that I made sure to do the forecasting we needed to get done so that we can have the best production possible for our products so we didn't have so much carryover from one round to another. However, what I did the most was having that last screen on our decisions to make sure we exploited every single component so that we could get the best results from our decisions we could get as possible.
Hi, welcome to Chester Company. This is Stephen Kells here, your leader in the group. Some of the things that I've done in my role as the leader have helped start initiatives within the company so other members of the group can finish them early. That way, when the deadline actually arises, we're already done. Some of the other things that I've done to help is I've gone over and reviewed every single decision that all of our coworkers have made together, and it has made a collective impact on our bottom line.
Hi guys, I'm Cole Jackson, lead financial planner of the Chester Company, and today I'll be talking to you guys about the cash position and emergency loans.
Hi everyone, I'm Elena Sarica from the Chester Company. I've been helping my company by being an administrator. I've helped to provide support in all areas of the company. First, today I want to talk to everyone about our return on assets. The ROA is an indicator of how profitable a company is relating to its total assets. Our ROA takes into account a company's debt, unlike other metrics like return of equity. It is calculated by net income divided by the total assets. Our company has strived to have a higher percentage for the ROA. At the end of round 6, our ROA is currently 10.34%, which is also our round 1 ROA. Return on assets answers the question of how hard are you working your assets. Following the ROA, I'm going to be talking about the return of equity. The ROE tells how effectively the company is using the dollars that are invested by the stockholders. This statistic is normally the most quoted when describing the performance of a company. It is also the most useful for stockholders. ROE is found by dividing net profit by the total equity. After round 6, the Chester Company had an ROE of 20.53%, which is much higher than round 1's ROE of 12.85%.
Thank you, Lainey. When it comes to leverage, one of the biggest components that our company learned is the importance of taking out loans. Most of all, when it comes to leverage, we learned that there are two big components that affect it, and that is liabilities, or specifically debt, and equity, which for our case and purposes was mostly stock. So when it comes to leverage, issuing stock lowers the ratio, and issuing debt higher the ratio. And our company specifically tended to have a lower leverage ratio. And we tended to be a little under the 1.8 mark as well. So what we tended to do is take out debt. However, there's both long-term debt and current debt that we could issue. And current debt had a lower interest rate, which led to us taking out current debt a little more than we did long-term debt. We also did notice, for that same reason, that we did not need to take out issue new stock very often. During our round 6 decisions, we actually took out $5,000 worth of current debt and issued $3,000 worth of long-term debt, which shows the same point that was made earlier, that we actually would issue more current debt than we did with long-term debt, which resulted us in getting the ratio to the certain point that we needed it to be at. Sales, variable costs, SG&A costs, and pricing criteria are the biggest components when it comes to tying into profits. When it came to our customer awareness and accessibility, it all came from our promo and sales budget, which in round 6 were $1,500 for the promo budget and $30,000 for our sales budget. And by using the TQM initiatives, we were able to lower our variable costs of labor and material costs. With these investments, we were able to lower our costs, which ultimately led to a higher profit and added to our cumulative profit throughout the rounds. Paying attention to our buying criteria allowed us to know that in the low-tech segment, by undercutting our prices compared to our competition, we obtained the highest market share we could get, giving us highest profit we could get.
So, Here at the bottom of our Finances tab, you can see our company's current and projected cash positions. A company's cash position reflects the amount of money left after all company payments are subtracted from the sum of both the total sales revenue that was reported on the pro forma income statement and the stock, current debt, and long-term debt entries on the financial spreadsheet. As per the Chester Company's financial policy, management has decided that as a safety net, we will aim for a value of around $10 million for our next year's cash position. This is because if our cash position were to fall below zero, a company would be forced to deal with our next topic, emergency loans. An emergency loan occurs every time a shortfall occurs, with a loan having a 7.5% premium above the current debt interest rate issued. While modest emergency loans aren't too serious, if we were forced to take on an emergency loan in excess of $10 million, our company would be at serious risk.
The first metric that I want to talk about is stock price. Stock price is the dollar amount that a share of your stock for your company will sell for. Our stock price at the end of round 6 has sold for a book value of $9.42. This is currently the second lowest stock within the industry. Now, one of the ways we want to kind of shed some light on how that stock price has gotten that way is we have failed to forecast accurately in the prior rounds, which has led to a continual decline in our stock price. Now, one of the ways we're going to get that up, of course, is to accurately forecast and produce enough inventory. That way it meets the demand of our customers, and therefore our stock price will rise because we're actually making a higher profit than we normally have.
This video was brought to you by the Chester Company.